Failing to plan means planning to fail. Yes, if you don't plan well, you are heading towards disaster. So how do businesses plan? One of the tools for planning is to prepare budgets. So in this video, I'm going to discuss 4 functional budgets. You can also call them operational budgets. So without a further ado, let's jump into the discussion. The very first budget we prepare is the sales budget, also known as mother of all budgets. Okay, budgeting is done in sequence. So the very first budget we prepare is called sales budget. So I'm preparing a sales budget here. Please keep in mind, if you compare all the budget, sales budget is the easiest one. All we need is just 2 information. Number 1, units to be sold. Obviously, this information you'll get from your marketing research department. So the demand they forecast, and we assume that 1000 units, this is units to be sold in January, 2000 units to be sold in February, 3000 in March, and let's say 4000 in April. The other information you need here is the selling price per unit. So in order to make the example simple, I'm assuming it to be $10. Okay, throughout. So we are selling this many units, but the selling price will be $10. So just multiply number of units by selling price, you get the sales value. 10,000, 20,000, 30,000 and 40,000. In the end, if you want, you can total them up. Total sales for 4 months, 100,000. So guys, sales budget is prepared. To prepare sales budget, you need 2 information. The number of units you're going to sell in the future months and at what price. So if the price is changing in the future months, you make the necessary adjustment. As soon as sales budget is prepared, the next step is to prepare production budget. So now I'm going to prepare production budget. Same number of months, you have January, February, March, April. Here, in order to start off with production budget, you have to start off with units to be sold. Production budget starts with this, units to be sold. And obviously don't take this amount, take this amount. Units, we're talking about units, not the value of sales. So we're talking about 1000 units, 2000 units. Production budget is all in units, okay? Please remember, 3000 and 4000 units. Better companies, what they do is they keep some provision. And what is meant by this? If 1000 units are to be sold, they don't make only 1000 units. What if you made 1000 units, you sold? Then what if more customer comes? You'll be in a stock out position. So what better companies do is they make a little more. So I'm assuming that the company has a 50% closing stock requirement. I'm writing here, add closing stock, which is 50% of production, which means 1000 units are to be sold. So you want to make 1000. If you do that, that will be 2 less. We want to have 50% of stock even if you have sold 1000 units. So 50% of 1000 is 500, which means you want to manufacture 1500 units. But wait, less opening stock. That's the procedure. Again, I'm assuming here, I'm assuming that we have 200 as opening stock. So if you minus, this is units to be produced or manufactured. Units to be manufactured. MFGD is the short form for manufactured. Please remember, there is a particular step, sequence, order we follow when we are making production budget. What is the first step? Start with units to be sold. Where you get it from? From sales. 1000 units to be sold, but we will not make only 1000. We make 50% extra. So 50% of 1000 is 500, which means we want to make 500 units. But Before making and manufacturing 500 units, let's check our finished goods warehouse. What if we have some finished goods already which are unsold? So we found that 200 units we already have which is unsold. So out of 1500, 200 units is already there, we will make 1300 units. Now it's going to make sense. How many units we are going to make? 1300. 200 we already have in stock, total 1500. From 1500, if we sell 1000, we will be left with 500 units. We always want to have some units left after we have sold the required number of units. Why? Because death and customers can come anytime. Okay, so I repeat, we are making 1300 units, 200 units we already have in the finished store, total 1500. Out of 1500, how many units you want to sell? 1000. And after selling 1000 from 1500, you will be left with 500 units. In case if there is some unexpected orders, we will still have 500 units, so we'll be able to fulfill the customer's order. So let's come to the next month. 2000 units. The company has a policy of having closing stock equal to 50%. 50% of 2000 is 1000 units. So 3000 units we should be making. Remember, the closing stock of January becomes the opening stock of February. So if you minus 500 here, how many units you should be making? 2500 units. Goes to March. 3000 units are to be sold from sales. But the company has a policy of 50% closing stock. So 50% of this is 1500. So it's 4500. The closing stock of February becomes the opening stock of March, which is 1000. So how many units we will be making? 3500 units. Going to April, 50% of this will be 2000. So this will be 6000. Closing stock will be the opening stock here. So we'll be making 4500 units. Ladies and gentlemen, this is how production budget is made. Once you have prepared the production budget, after that it's up to you. Do you want to make raw material purchase budget or labor budget? It's up to you. So I am preparing raw material purchase budget. We have space here. Same January, February, March and April. Okay, now I am preparing raw material purchase budget. Please remember, once production budget is made for raw material or labor, these are the amounts we are going to use. So raw material purchase budget will begin with units to be manufactured. MFGD is manufactured, or units to be produced, or start with production budget. How many units? 1300, 2500, 3500, 4500. Now these are units. Now I'm assuming in order to manufacture one finished unit, you require 10 kilograms of raw material. So I'm writing here raw material required per unit is 10 kilograms. So when you multiply 1300 into 10 will give you 13,000 kilograms. This will give you 25,000 kilograms. This will give you 35,000 kilograms. And this will give you 45,000 kilograms. Now this many kilograms you require to make 1300 units. It's good to have some safety stock. So I'm assuming the company has a policy of buying more raw material in order to avoid stock out positions. So again, closing stock requirement. Closing stock requirement, I'm assuming that it is at 50% of the production requirement. In order to make 1300 units, you require 13,000 kilograms. But 15% of that is 6,500 kilograms. 50% of this will be 12,500 kilograms. This will be 17,500 kilograms. This will be 22,500 kilograms. So when you add, this will be 19,500 kilograms. This will be 37,500 kilograms. This will be 42,500. This will be 67,500 kilograms. This means this many kilograms are to be purchased. But wait, let's check the raw material warehouse. There is a possibility some raw material is already with us, which is unutilized. So less opening stock of raw material. Now I'm assuming we have 9,500 kilograms already there in our warehouse. So you minus that. So how many kilograms will be purchasing? 10,000 kilograms. Okay. So whatever is the closing stock becomes the opening stock here, 6,500. So we'll be purchasing 31,500. Whatever is the closing stock becomes the opening stock here, 12,500. So when you minus, okay, you'll be buying 30,000 here, and whatever is there you write here and you minus. So this is in kilograms. Then I'm writing here cost per kilograms. So I'm assuming cost per kilogram is just $2. Okay, so you multiply by $2. So you multiply this by $2. So 10,000 into 2 is $20,000. So this much of raw material. In terms of kilograms, 10,000 kilograms. In terms of value, $20,000. Multiply by 2. $63,000. Multiply by 2. 60,000. So on. So now you have prepared raw material purchase budget. If you're attempting some MCQs, an option will be A, B, C, D. Check if they're asking you to calculate raw material purchase in options A, B, C, D. Are they asking kilograms or dollars? If they're asking kilograms, let's say they ask for how much of raw material should be purchased in the month of January. So you look at January raw material purchase budget and you need to purchase 10,000 kilograms. If the answer is in kilograms, the answer is 10,000 kilograms. If the answer are in dollars, then the answer is $20,000. Last operating budget or functional budget is labor budget. As I already explained, once production budget is made, these amounts will be used to start off with raw material budget and labor budget. Look, I started raw material with this amount. So even if I'm making labor budget, I will use the units to be manufactured amount. Labor budget will begin with this amount. So I don't have space here. I'm making it here labor budget. Okay, again I have January, February, let's say March, forget April. So we begin with units to be manufactured. Units to be MFGDs manufactured. How much? I'll pick the units from production budget. 1,300, 2,500, 3,500. 1,300 units, 2,500 and 3,500 units. Question will give you how many labor hours are required to make one unit. So next thing you need to know is labor hour required per unit. So I'm assuming 20 labor hours. 20 labor hours. So you multiply, this will give you 26,000 labor hours. This will give you 50,000 labor hours. This will give you 70,000 labor hours. Here you need to pay attention. In most of the factories there is a possibility the laborers are paid salaries. Salaries means fixed salaries. Let's say if I'm working in a company as a laborer, I'm given a fixed salary, monthly salary, and I'm supposed to work 8 hours a day. Out of those 8 hours, I am busy 5 hours and 3 hours I'm idle. But I'm paid for 8 hours. Which means if the company gets additional order which requires 2 hours, I'm available. There is no extra labor cost. So if one person is idle for 3 hours, there is a possibility company may have 1,000 people working and all of them are idle for 3 hours. So 1,000 into 3, the idle hours will be 3,000 hours. So here I am just assuming that the company has some idle hours for which they don't have to pay laborers anything. So I'm assuming there are some idle hours. So we'll say less idle hours. Let's say 6,000, 10,000 and 20,000 idle hours. So if you minus, for the remaining, the laborers are to be paid. For 20,000 labor hours, you have to pay them. 40,000 labor hours are required for production, which is to be paid, and 50,000. And if we are paying laborers, let's say $20 per hour, this is the wage rate. So into 20, into 20, into 20. Okay. This will be 400,000, 800,000 and 1 million. So this is your labor cost. Here again, you got to be very careful in examination. You may be attempting an MCQ where the question would be, what is the labor cost to be paid in the month of February? So if they ask labor cost, the answer should be in dollars. So if the option A, B, C, D is in dollars, you're going to pick 800,000. If the answer A, B, C, D of MCQ is in labor hours, then you are going to choose 40,000 labor hours for February. So guys, these were the 4 functional budgets. I hope you have understood. If there is any query, leave it in the comment section. I will reply. Also, let me know from which part of the world you are watching. I'm very keen to know where my subscribers are. If you're not yet subscribed, please subscribe my channel. Press the bell notification button so that you get my videos on a timely basis. If you like this video, please share it with your dear and near ones so that others can also benefit. Thank you so very much for your precious time. Love you all.